I'm pleased to share with you our earnings report for Q1 FY20, and I'm delighted that we have reported a very, very strong start to this fiscal. Our consolidated revenues at a group level has grown 25% to 1,490 crores from 1,193 crores last fiscal. Net profit has zoomed to 223 crores, a growth of 86%, which excludes an exceptional item, which then brings the reported profit growth to 206 crores. The net profit has been impacted due to an exceptional item, which is on account of a tax on the restructuring of group entities. Consolidated EBITDA margins were 31% as compared to 26% in Q1 last fiscal. And EBITDA itself has increased 52% to 462 crores from 307 crores last fiscal. The profit margins, excluding exceptional items, stood at 15%. And our gross R&D spend was at 110 crores, which corresponds to 11% of revenues, excluding Syngene. Of this, 79 crores has been reported at the P&L level and the balance has been capitalized. The net R&D expenses was up 78%, therefore at 44 crores. From a segment perspective, all of our segments have reported growth. Small molecules has reported a 20% jump in revenues from 400 crores last fiscal to 480 crores this fiscal. Biologics has been the biggest growth driver this fiscal, from 250 crores last fiscal to 490 crores this fiscal, which is almost a doubling of revenues. Research services has also grown 4% from 405 crores to 421 crores this fiscal. The only underperforming segment in our business has been branded formulations, which has declined 9% to 133 crores from 147 crores last fiscal, largely on account of repricing that has been mandated by the Ministry of Health in the UAE business. The India business has shown a modest growth this quarter of about 5%. Now, coming to the segment-wise performance, the small molecules business has largely benefited from API sales on account of immunosuppressants and because of our continued growth in terms of our generics in the US market, largely rosuvastatin, simvastatin, and now recently atorvastatin. We have also commenced a large manufacturing endeavor in Visakhapatnam in the SEZ to basically cope with our expanding demand for our fermentation-based APIs and largely the immunosuppressants, which is what we have now initiated in Visakhapatnam at a cost of 600 crores, which will basically extend over 3 years. So we expect that this facility in Visakhapatnam will start becoming fully operational by 2022-2023. As far as biologics is concerned, we've had a stellar quarter, and this has largely been bolstered because of our emerging market business of both biosimilars as well as insulins, and of course a large contribution on account of Fulphila sales in the US has really led to this very strong quarter. We expect our business to continue to mimic this particular growth momentum that we have seen. As you know, we've seen sequential improvement in our revenues, both in small molecules and of course in the biologics business as well. The biologics segment actually has reported PBIT margins of 38% this quarter, as compared to 11% last year and 33% last quarter. So you can see the earnings improvement in the biologics business, which is going to basically be a very strong factor in our growth and earnings quality for the rest of this fiscal. Ogivri, that is our biosimilar trastuzumab, was approved in Canada as the first biosimilar trastuzumab. We've also seen our trastuzumab and insulin products gain greater market footprint across the world. And our partner Mylan continues to commercialize Semglee, which is biosimilar glargine in Europe. And trastuzumab continues to do well in Europe, AFMET and LATAM regions. As you know, we have now a portfolio of 4 biosimilars in global market, which is biosimilar trastuzumab, biosimilar pegfilgrastim, Semglee, which is the biosimilar glargine, and of course biosimilar adalimumab through our partners Mylan. We believe that the strong scientific focus that we have put in terms of our biologics business has put us in good stead. We expect to keep expanding this biologics portfolio as we move ahead. Coming to novels, our partner Equillium has basically got further approval by US FDA for other indications, especially lupus nephritis. It has also continues to expand, continues to extend its trials in acute asthma, and it continues to make progress in the GVHD or graft versus host disease trial. Branded formulations, as I mentioned, has been an underperformer this quarter. However, the India business continues to grow well with insulins, Biomab, Canmab and Krabeva, which are the key products that we are marketing in this segment. In terms of outlook, I would say that we expect this growth momentum to continue, and we expect the second half to be even stronger than the first half. So we are very confident that FY20 is going to end on a strong note, largely driven by our biologics business, small molecules business, and of course the research services business. Syngene has had a muted first quarter, but it expects to catch up in the second quarter and expects to end the year on a strong note as well. So I think overall our businesses are performing extremely well for us, and we are seeing a good return on investment in everything that we do in these 3 important key businesses that I talked about, and these are our real strong growth drivers for this fiscal and beyond. So with that, I will end my comments and take on more specific questions in terms of our businesses. Thank you.